How to compute and journalize transaction involving interest. For this one, we can have many possible cases and scenarios, but let's just use this problem. On August 1, 2022X, Mr. Pibesic accepted a 4-month 10% note for $12,000 from a customer in settlement of an accounts receivable. Give the journal entry on August 1 and the adjusting entry at the end of September, company's end of fiscal year. Answer will be August 1, debit notes receivable 12,000, credit accounts receivable 12,000. This entry means we are eliminating the AR, that's why it's credited, but we are replacing it instead with notes receivable or NR, now debited to reflect the transfer from AR to NR. Now the adjusting entry on September 30 would be debit interest receivable 200 and credit interest revenue or interest income 200. Computed as 12,000, the NR times 10% annual interest and times 2/12 for the prorated month. Also, we can use the 60 days over 360 or the 60 days over 365. It depends whatever is the requirements or the preference of your prof or teacher. We use interest receivable because Pibesic has not yet received the payment for the interest even if it was already earned through the passage of time, which explains also why we credited interest revenue. We earned some portions from August 1 to September 30.